Started the recording. So we're gonna go ahead and get this going here in a second. Get the music shut off. We're gonna everything taken care of here. Okay, I'm gonna get this deck here fired up. Some of you also may have joined me in the audit section. We went through that went well, but this is going to focus a little bit more on what we covered, or what we're covering specifically related to bank reconciliations and cash. Okay, let's see what we got. Adam's here. Okay, I took FAR once. Yeah, and if you guys can mention where you're at in your CPA exam journey, if you've taken this as your first lap through, is this a retake? Diane, welcome. Yeah, and as Corinne mentioned, if everybody could just make sure their computers are muted. Looks like we got Jill, Jenny, Diane, Adam, Dawn, welcome. Nora, Eric, hey Sean, Lestari, Annabella, Casey, Tracy, welcome back, Tracy. Yeah, we're gonna get going here, and we're gonna talk specifically about cash. Like I said, really we're talking about this specific line item in the balance sheet. It's an important line item. Cash is always going to be pervasive to the financial statements. When preparing the financial statements, there's always a susceptibility to overstating cash balances. So that's really where the reconciliation is going to come into play. But we're going to preface with talking a little bit about what it is cash actually is. And I know that sounds a little silly, but it is a little bit more of a broad definition than you might think. But let's just dive right into it. I appreciate everybody dropping their comments in the chat. It keeps everybody engaged, and we're all in this together at the end of the day. I mean, there's no reason that all of us can't be CPAs when it's all said and done. And it's a privilege to have the opportunity to be a part of your all success. So with that being said, let's just get after it. So this is the deck that we prepared related to cash and bank reconciliations. And again, the purpose of this specific weekend accountability and tutoring session is to really just make sure that you are remaining accountable and that you're making sure that you are getting up and getting some of this critical thinking in and getting the ball rolling on whatever section it is that you're studying for. And the reason that we chose to do this during the weekends to start is just because everybody has a different scenario. Everybody has a different situation in their personal lives. Many of you are working full time. Many of you are balancing a family, and maybe you have children at home. So that's why it's super important that you use your weekends to really get your deep work in, to really make sure that you're putting in the extra time. Because if you are working full time, maybe even part time, maybe you're getting your master's degree and you're still in school, and regardless, you have other things going on. So using this weekend time is going to be key, because during the weekdays, you have a lot going on. And we have a whole other strategy for how to study during the weekdays, but this is going to be your optimal time to really put in a number of hours if you can swing it. And it's tough sometimes to just get the ball rolling on the weekends. And so just having these group sessions to make sure that everybody has, gets their mind working on this subject and zeroes their focus in on some of these really critical topics. Many of you are taking this for the second lap through, so you already have a foundation and a fundamental understanding of a lot of this that we're going to cover. But beyond that, it's just super important to make sure that there are certain topics that you're going to need to really thoroughly understand. And bank reconciliations and cash can really be easy points on this exam if you slow down your approach. And if everybody can mute their computers, just to make sure that don't have any interruptions with the quality for everybody else, that'd be awesome. So I heard a little background noise. So if you guys can all just double check and make sure that your computers are muted, your audios, there's a little microphone icon. You can click on that, that'll mute it. But anyway, okay, so cash and bank recs, and thinking about FAR in more high level terminology and just the concept of FAR. What's the idea of this exam? What is it that they want you to be prepared for? They really want you to be prepared to dissect every single line item in the financial statements. So there are three major financial statements that the exam wants you to have a really thorough understanding of. And that's going to be the income statement, the balance sheet, and the statement of cash flows. And on the surface, looking at each of those three financial statements, it might look like, there's, 30, 40 line items here total. Like how complicated is this really going to be? But there are two fundamental questions that the FAR exam really needs and wants you to understand. And that's, how is something getting reported? Meaning, how are we characterizing, the recording of a certain account? Is this going to be recorded as revenue? And if so, how does that impact the balance sheet? Is this going to be a sale that occurred or a transaction that occurred in exchange for cash, which is what we're talking about today? Or was this a sale made on credit, in which case we're going to have to record an account receivable? So we're thinking about the cash line item in the balance sheet, and we're taking that number, whatever the value is, right? The second thing that the exam really wants you to understand is the value. What is the number that is being reported, and how did we get to that number? If the cash line item says $6,482,391, that's great. But how do we know that we properly prepared and presented the cash line item to make sure that that number is valued properly? Okay, so we're characterizing the account, making sure that it is recorded correctly as cash, and we are also recording the correct value. Okay, so little focus areas I put here. We're going to focus on starting with adjustments made to the bank statement. Everything else to the books is going to be an adjustment to the books. We're going to go ahead and upload this deck after we're done. We're also going to upload a few practice questions as well as some focus notes, really where we want you to zero your focus in on. But cash and cash equivalents plus the bank reconciliation. Okay, so there might be a question or two on the exam that is specific to cash and equivalents. And really, this is just making sure that you have a solid understanding of just the definition. This is more terminology, whereas the bank rec is going to be more of a process that we need to go through and make sure that you are thinking properly when you're navigating through each of the impacts that might occur. Okay, so starting with a high level understanding of what cash and equivalents are. Everybody knows what cash is. We know that this is a current asset. Okay, so anybody who's gone through college courses related to this knows that cash is a current asset. If you don't know that, I suggest you go back and really make sure you understand what your current assets are. Okay, but this is one of the more fundamental current assets that is reported on the balance sheet. Okay, so that being said, what does that mean for the definition of an equivalent to cash? So it can be cash, but it can also be something that is equivalent to cash. It can be anything that is a highly liquid asset that can be converted into cash within 90 days or less. Okay, so that is an equivalent. So anything from, and this is our little visual here that makes sure that whatever it is, it's going to mature within 90 days. So we can convert whatever it is, if maybe it's a security, maybe it's a certificate of deposit, it's something that says, okay, you could convert this into cash within 90 days. To financial reporting standards, the FASB, they are basically saying that's the.
Actually, sorry, we don't see the screen.
Oh, you don't see the screen.
Yeah.
Got it. Okay. All right. Let me just double check on that.
Actually, she just need to hit the Zoom on if she downloaded it. You're fine on your end because I can see you.
We only see you.
We only see you. We don't see the screen. We don't see you sharing the screen.
Okay. All right. How about now?
Yeah, that's better.
Appreciate that. Thanks for the heads up, guys. All right. I apologize about that. Basically, all that you missed was this screen up to this point. So I don't think there's a whole lot going on. This doesn't really tell you much. So as long as you heard everything that I said, I'm good with where we're at. So don't feel like there's anything on the screen that you missed. All I'm saying here, cash and cash equivalents. What is a cash and what is cash and what are cash equivalents? Cash, like we said, you know what that is. An equivalent is anything that can be converted into cash within 90 days or less. Okay, so what is the definition of a cash and cash equivalent? Money or currency. This could be checking accounts, saving accounts, money market funds, negotiable paper, or unrestricted deposits. Okay, so you don't need to memorize it, but just know that these vehicles are converted into cash within 90 days or less. What is not included in cash? And again, this is not, this is not going to be the key area to focus on. You might see one or two questions, one probably at the most when it comes to this type of definition. Understanding what is not included, what is excluded from cash, certificates of deposit. Okay, so certificates of deposit. If this is a certificate of deposit that is, this could go potentially one way or the other. If it's less than 90 days, then it would be considered an equivalent. But if it's a certificate of deposit, and this is going to be considered more of a savings product, then it would be excluded from cash. Legally restricted compensating balances. Okay, so if this is restricted and saved, it's basically being saved for something that can be used in the long term. Basically, these are funds that a company is not able to use today. And then finally, restricted cash funds, same concept, bond sinking fund. These are going to be exercised in the future. So long-term, they're not considered equivalents. Thinking about a quick example, included on the balance sheet of Farmer Boy Eggs Inc. was $40,000 of cash and $20,000 from a money market fund. We're going to include both of these, right? Because a money market fund is considered an equivalent. So understanding the definitions of equivalence, what is consistent of an equivalent, that is going to be key. All right, so this is going to be the bulk of the actual information that we really want to focus your attention on, which is the bank reconciliation. Okay, so bank reconciliations have a specific process that really just, it could be a lot to try to understand, because there's a lot of impacts here. And the name of the game is making sure that what is reported in the books ties out to what is presented in the source documentation, which is the bank statements. Okay, so the bank statements really ultimately are how we are presenting our books. Let's say that this is Sinbad. Okay, so Sinbad is going to be our character that we want to focus on as our bookkeeper. Okay, so our bookkeeper Sinbad is taking all the information that he has received from the bank statements, which, maybe he's doing this on QuickBooks, maybe he's just doing it manually. But he's taking the information from the source documentation, which is where the cash is going to initially come from, which is from the bank, right? If you want to prepare the cash balance, what source documentation is going to give you that story? The bank statements. Okay, so Sinbad's going to take what is presented, and our character on the bank statement side is going to be Dottie. Okay, so this is our bank teller, Dottie. She works at the bank, and she's going to present the bank statements to Sinbad. Okay, so what you need to remember is ultimately what is the bank statement balance, and does it tie to the balance on the books? Okay, so what the exam is going to do is it's going to give you a series of information. It's going to give you, additional facts such as deposits in transit, outstanding checks, potentially interest income or interest expenses. It's going to give you things like the bank collected in advance, service charges, and NSF funds. So it's just really important that you understand why these are impacting either the books or the bank. And what I always say is to focus primarily on the bank statement side. Okay, so on the bank statement side, we're thinking about the D and the O in Dottie. And that's going to stand for deposits in transit and outstanding checks. All right, we're going to come back to the slide as we go through it. But deposits in transit and outstanding checks are what is going to impact the bank statements. Okay, so if your strategy is starting with the bank statement side, and assuming that pretty much everything else impacts the books, if you're, like I said, you're going to have a series of information here, and you're going to be navigating through all of it, and you're going to be trying to remember, okay, does that impact the books? Does it impact the bank statements? What's the overall impact? And then you could think back on it, and you remember the D and the O. That's going to make your life so much easier when you're trying to remember, does it impact the bank or the books? Okay, so if we start on the bank statement side, you remember everything here from deposits in transit and outstanding checks impact the bank, and assuming everything else impacts the books, it's going to only increase the chance that you're going to get these questions right. Okay, so what is deposits in transit versus outstanding checks? And thinking intuitively here about why this impacts the bank statements and not the books. So deposits in transit, first of all, the impacts to the books, there's going to generally be more potential for error on the books than the bank statement side. And the reason is because the preparation of the books is usually going to be manual by a bookkeeper, whereas so much of the bank statements are going to be automatically populated, right? There's trillions of dollars in these banks, and the creation of these bank statements are so automated, and there's so much AI these days that there's a very rare chance that there's a lot of error on the bank statements. But thinking about deposits in transit and outstanding checks, this is the D and the O in DOTI. And why does this impact the bank statements? Because first of all, what is deposits in transit? So deposits in transit have to do with a deposit, right? What is a deposit? When you are depositing a check or cash to your bank, that is going to be cash that is going to the bank statements, right? So it's going to your bank, but maybe you've already recorded it. Maybe you received a check from your vendor or from your supplier. You owe them money, and basically you've received money from your supplier or your vendor, and now you have to deposit that check, right? So Sinbad's already recorded it in the books, but now he needs to take it to the bank and drop it off. Okay, so basically why this is an addition to the bank statements is because we're saying I've dropped this check off at the bank, but it hasn't hit my bank statements yet. Or maybe I've recorded it on the books, but I haven't dropped it off yet. In which case, yes, we have recorded this and it has increased the book side, but it hasn't impacted the bank statement side yet. So when we're doing this reconciliation to make sure that it all ties out, it's already increased the books, but the deposit that is still in transit, meaning we've deposited, or maybe we've sent the check to the bank, maybe we've taken a picture on our phone and we did it through the app, but it still hasn't impacted the bank statements. It hasn't hit the bank statements yet. That is why we are going to be adding this to the bank statement side of this reconciliation. What's an outstanding check? Okay, so an outstanding check has to do with a payment, right? If it's a check that's outstanding, we've written the check, we've sent it to our vendor who we purchased our inventory from, but the cash hasn't left my account yet, right? So sometimes they're going to say you have 3 to 5 business days before this impacts your account, right? And you're going to send this out, and basically in your books, right, Sinbad's writing it down. Okay, we've spent the money, cash is going out the door. I've reduced the cash account balance, but it hasn't left my account yet. So in order to make sure that ties out for financial reporting purposes, we need to just make sure that we are making a reduction on the bank statement balance. Okay, so that's super important to remember, everybody. The D and the O in DOTI. And if we start again, I know that it's sort of hard to kind of process all this without seeing a question, and we'll get there. But when you're looking through this and you're seeing all this information, I know that I speak for myself, and when I've worked with a lot of students over the years, where everybody gets tripped up is they try to memorize all of this. And if you could break this down and make it a little bit more absorbable and digestible, it's only going to make your life that much easier. And so therefore, by starting on the bank statement side, and just remembering that the D and the O are what you need to remember first. Once you just see that information, you carve that out, you write it off to the side on your pen and paper on the exam at the Prometric Center. Boom, you know that those amounts are going to impact the bank statements. And think about this intuitively. What is a deposit? We're depositing cash. So therefore, we've recorded it, but it hasn't impacted the bank yet. It hasn't hit our account yet. So that's going to be an increase to the bank statement side. When it's an outstanding check, this is a check that has been sent out, but again, we've recorded it, but the check hasn't left our account. The funds haven't left our account. So we're going to need to reduce that from the bank statements. Okay, so moving on to the book side. Like I said, we're going to start with those two and just kind of make sure that, I don't want to say that we're assuming everything is going to impact the books, but 90 to 95% of the time, these are the 6 items that they're going to give you as potential impacts here. So if you do know this, right, the whole idea is that you want to give yourself an 80 to 90% chance on every single question to get it right. A lot of people confuse that with a 50 to 60% chance, and they think, okay, I know this, but in reality, they've just kind of memorized a bunch of words. And this is sort of a memorizing strategy, but you still need to know what each of these accounts actually are, or what each of these impacts actually are. Okay, so thinking about the book side, what is interest income? If any of you have a savings account or a brokerage account at, Merrill Lynch or wherever, Fidelity, you might have an investment. A savings account is probably a better example, but if you have a savings account, you're going to accrue interest. And often what happens is they're not going to tell you, Sinbad's not going to get is not going to get a notification from the bank that says, hey, this interest income has impacted the bank statements. We've already recorded it. So basically what Sinbad, the bookkeeper, would need to do is identify the fact that interest income has increased the bank statements. And now he needs to go back and impact the books and basically record this on the books. So this would be an increase to the books. Okay, so bank collections, what is this? And why would this be an increase to the books? So bank collections would basically say that the bank has collected on your behalf. Okay, so if, for example, you had an automatic payment received and it just impacted the bank statements, or the bank received it, you weren't aware unless you went into your, Bank of America checking account and saw it. It isn't until you realize that the bank collected on your behalf that that cash has been received. So to make sure that your books are recording that correctly, you want to go ahead and add the fact that the bank collections have been made. Okay, so that is an addition to the books. Okay, so service charges. What are service charges? So service charges have to do with basically if the bank is running or charging you for banking with them. Okay, so if you are banking with Bank of America and they give you a service charge for having a savings account with them, and it's $25 a month or whatever as a business account, they're going to reduce that, and it's not something that the bookkeeper would necessarily be aware of. So because that reduction has happened on the bank statement side, it's now going to be up to Sinbad to go back and reduce this from the books. Okay, so service charges are going to be a reduction on the books. It's already been a reduction on the bank statements or in your bank account. It's now going to be up to the bookkeeper to make sure that that ties out. And then finally, NSF funds. Okay, so non-sufficient funds is basically saying that you don't have enough money in your bank account. Okay, so maybe you've spent money or maybe you've received, that the client, whoever's paying you, doesn't have enough money in their bank account to pay you. Okay, so you've received money, right? Let's say that your client has paid you the $1,000, and 3 to 5 days later, the check bounced, right? You got a notification that says that whoever paid you didn't have enough money in their account. So you've recorded this cash as received because you received the check, you deposited it, but 3 to 5 business days later, it got reversed because there was a lack of money in the client's account. So because you initially recorded this as an increase to cash on your books and the check bounced, it's now going to be up to you to reduce this on the books. Okay, so super important to remember the fact that non-sufficient funds are generally going to be talking about the non-sufficient funds on the client side, whoever's paying you. Okay, so it's easy to think about, okay, this is NSF on our end, right? Maybe we don't have enough money in our account, but that's generally not what the exam is talking about. So be cognizant of the fact that the NSF fund has to do with the clients not having enough money, not us. And then finally, errors can impact either side. But as I mentioned earlier, generally you're going to see an error impacting the book side, not the bank statement side. So be careful at what's happening. Like, usually the exam will say something like the bank or the bookkeeper, incorrectly recorded, $272 instead of $227, in which case that's an error. You overstated that it was cash received by that, whatever it is, $50 or so. So now it's going to be up to you to determine the difference, first of all, and then go back and add that difference to the books. All right. It's not always going to be an addition. Like, what if you recorded this as, previously you would subtract that from the books because it was $272 you recorded, $227 maybe is what the correct amount was. The difference that you overstated this by was 50, you would reduce it. All right. But on the contrary, what if you recorded this as 227 when really it was 272? Then you would go ahead and add that to the books. All right. So on the exam, when it comes to strategy here, take a step back and ask yourself, how is this impacting how we recorded this on the books? Okay, so anytime there's an error, they're not going to say specifically like this was an error. They're going to say the bookkeeper or the company, ABC company, whatever it is, recorded this as XYZ, the correct amount later to determine that this amount was ABC. Okay, so you now need to take a step back and think, okay, how did management, whoever's preparing the financial statements, initially record this? And then you need to ask yourself, how is it that they should have recorded this as? Okay, so once you do that, you can now work backwards and take that difference and basically plug and chug, right? You want to now go ahead and determine, is this an addition or a subtraction to the books? Okay, so that's Dottie and Sinbad. Need to know it. We have a couple of questions here to think about. So we can run through this example. This is a little bit more of a challenging one. It has to do with what was received by the FAR CPA a few years back. But it's thinking about how we're going to report, how the companies should report the bank account balances in the balance sheet. All right, so let's take a look at it. So on December 31st, the company has the following bank statement accounts corresponding to the cash balances. California Bank, we have an operating account from Summit Ridge, right? So we're assuming that these are different banks. All right, so operating account from Summit Ridge minus 400,000, Bakersville 300,000, Smithville 50,000, and a savings account of 500,000. And then Sedona Bank has a checking account of negative 375,000. All right, so we want to know, how is the company going to report the account balances in the balance sheet as of December 31st? Okay, so we have a checking account in Sedona Bank that is a negative balance, right? We know that that's negative $375,000. All right, so this is going to be reported separately from California Bank. Okay, so if we're reporting this separately, we know that this is going to be a liability because there's not anything that is going to net this out. Okay, so if we have a negative $35,000 checking account, that's an amount that we need to pay back, right? Maybe that's a credit card that racked up. And we need to pay it back. So that's ultimately going to be a liability. Okay, so 375,000 is going to get reported as a liability. But now that we're taking a look at California Bank and we're separating this, we have an opportunity to net this out. All right, so Summit Ridge has a negative $400,000 balance, right? Maybe the credit card racked up and we have 400 grand that we need to pay back. We got Bakersville with 300,000, Smithville with a positive balance of 50,000, and we got that savings account of 500,000. All right, so really straightforward here, guys. All we need to do is net this out by taking 300,000, 50,000, and 500,000. And this is more of a netting question. We do have questions in the homework and the focus notes that are going to talk a little bit more about what we discussed in the bank reconciliation stuff, which is ultimately going to be, like I said, the most important part of what you need to know. And so what we can take a look at here, and this is all going to get uploaded here in the books. This is all going to get uploaded in the Google Drive and in here in the Facebook groups. But taking a look at the focus notes that you guys should all take a look at. This is really going to zero in on what we talked about with the bank reconciliations. We need to ask ourselves, whose fault was it? Was it the bank statement side, or is it going to be an error, or did we forget to do something to tie this out on the book side? Okay, so going through this is going to be key, making sure you know this. And we're about to wrap up here. We got a few minutes left. And then in the bigger picture, we can't memorize. Understand the intuition behind these impacts. What is a deposit in transit? Thinking about it, this is cash that is going to get deposited. So it hasn't hit the banks yet. We need to add this back to the books. We need to add this back to the bank statements because it's already been recorded in the books, but it hasn't hit the bank yet. Outstanding checks, that's cash going out the door. All right, so if cash is going out the door, we have 3 to 5 business days for this to leave your bank account. We've submitted the check, but it hasn't left our account yet. We've reduced the cash balance on the books because we've submitted the check, but it hasn't hit the bank, so we need to go back and reduce that. Okay, and then again, on the book side, we need to think about interest income, bank collections, service charges, NSF checks. And that's it. All right, so thinking about the intuition behind it, understanding why these impact the bank side versus the book side. That's your key to success here. FAR is really a comprehensive exam. There's so much information that you're going to be chewing on and trying to understand. And this is really just one line item in the balance sheet. So understanding how this is important, and the name of the game to FAR is really just identifying what are the 2 to 3 types of questions per topic that it is that they can ask. When it comes to cash and equivalents, yes, be aware of what the definition of equivalents are, what's included versus excluded. But that should only be 10 to 15% of your time when it comes to cash. 85% of the time needs to be making sure that you have a thorough understanding of the bank reconciliation. Okay, so we have a good simulation for those of you who are studying on the universal platform. Really breaks this stuff down. We have a bunch of questions in our multiple choice questions, all with video explanations that'll walk you through it step by step. And then in addition to that, we have the homework that's going to get uploaded. There's a few questions there that we've determined can really narrow your focus on the most important areas. But build a mental map, make sure that this is slowed down in your brain. And again, identify the 2 to 3 questions that they can ask. Give yourself a strategy. If you start on the bank statement side, understanding deposits in transit and outstanding checks are going to be those impacts, and everything else is impacting the books. That's going to be just one step closer to making sure you have a good understanding and you're getting these questions right. All right, so we're going to wrap it up there. If you guys have any questions, feel free to reach out to me via Messenger. If you want to shoot me an email, this recording is going to get published and posted, so you'll be able to rewatch it if you have any questions or missed out on anything. Thanks for joining us, guys, and we will keep this going.
Thank you.
Of course. Let's see if I'll just hang on here until this wraps up. You guys have any comments in the chats, feel free to leave them. I'll be on until they kick me off. And then I'm around all day if you guys want to reach out, ask any further questions specific to what we covered. Happy to answer anything for you. Don, the homework will be posted in the next 10 to 15 minutes. I'm going to go ahead and put that in the Drive folder. We're still getting everything else wrapped up, but FAR will be posted here in just a few minutes, and we'll send out an email.
Hey, Joey, how's it going?
Hey, Adam, how's it going?
Doing good, thanks.
Good.
I just had a quick question.
Yep.
About the percentage in the module on the Universal CPA Review app or the website. When you get to a certain percentage, is that just telling you how you're proficient in there, or is
yeah, it's generally going to be the amount that so it has some impact to that, but it's also just how much of it you've covered. It's something that we're still working on improving the actual analytics of it from a tech standpoint. But yeah, it's basically, I mean, look, at the end of the day, if you go through the lecture, if you take a look at the video, or sorry, the lecture, the study guides, if you go through all the questions and watch the video explanations, and you can explain it to yourself, you have a thorough understanding. So I wouldn't let the metrics be, regardless of the platform you're using, I wouldn't let it define how prepared you are necessarily.
I gotcha. Thank you.
Yep. But yeah, you can use it for that, for that purpose as well. Just making sure it tells you how far along you are. Any other questions? We got a few people still here. You guys want to jump on and ask away, feel free.
Also, my scheduling is, I was going to ask you, what do you recommend for, I remember on LinkedIn, you posted a good schedule to study for FAR. What do you have, if you're trying to study for maybe 2 sessions at a time, is that advisable if you're on a time crunch, or is it better just to study for 1 session at a time?
Yeah, 1 second. Don, just to let you know, our next session is going to be, for FAR, it's going to be same time next week. And Adam, I generally recommend not studying for 2 sections at a time. I think the CPA exam is extremely robust, comprehensive, and it's hard enough to pass one at a time. But with that being said, if you want to do it and you think you could pass it, all the power to you. But that's just my general consensus. If you're working full time, make sure that you get some good time in the mornings during the weekdays, and then utilize your weekends to really get the bulk of your studying down.
Gotcha. Thank you.
Of course. Still got a few minutes left. If anybody has any questions, feel free to drop them in. I'm hanging around. Looks like we got 3 minutes left.
Oh, hey, Joey, the FAR study schedule you posted on LinkedIn, is that for an 8-week session, like to get prepared for like 2 months worth, or?
Yeah, so I think that that's a good indicator of being prepared in a minimum of 8 weeks, depending on how fast you're processing the information. And if it's your first lap through. If it's your second lap through and you've already taken it once, I would say that is not necessarily, you don't necessarily need 8 weeks. I think you could do it in 6 potentially, but it depends on where you're at and what score you got. But yeah, that schedule is, going to get you about 20-25 hours in. And with that being said, that's kind of what I would recommend for studying.
And I think somebody in the chat was requesting that to where to find it. Can you please?
Yeah, I can go ahead and post that, Don, as a group post. I think that would probably be easiest. I'll do that right now after this call wraps up. We got 2 minutes left before it
Awesome. Thank
kicks
you.
me out. Of course. In terms of study plans, yeah, we have some study plans that we're working on. And this kind of ties back to what we talked about, or what Adam's referring to as the study schedule. But what we're working on currently to adding is an actual plan that really tells you like what specific topics you should be narrowing your focus on per module. But at the end of the day, this is about quality and consistent study time, not total study time. I think a lot of people, try to, ask how long you should study in total, but it's really not about that. It's making sure that each study session is going to allow you to really prepare and understand what it is being asked, but also just making sure that you're staying consistent. There's a huge element here for a huge time element here, in terms of consistent time. You can't go 4 to 5 days without looking at this stuff. You have to continuously be repeating and applying this over and over again to really make sure that you're getting that repetition in for each topic. Yep. And we're going to continue to hash out more study plan related stuff and exam strategy as we get going. This is just our first week. A lot of this is still trial and error, but if you guys have any feedback, please reach out to me directly via Facebook, or if you want to send me an email, just to kind of give me some feedback on how we can improve this going forward. That's what we're constantly looking to do. All right, well, it's going to kick